Since the end of 2015, venture capital investment has slowed down in many of the different verticals. In 2016, if we include large investments in startups that have already reached a certain scale, like Uber or Didi, investment flows have definitely gone down. What's interesting is that this is a good test for the nascent market of equity crowdfunding, mostly because all of the deals done on these platforms really rely on venture capital money eventually to scale further. What's fascinating is that many different models have emerged and platforms have adopted different types of solution for solving the key problem in this space, which is information asymmetry. For a regular investor or even an accredited investor, it's extremely hard to evaluate a startup just based on a profile online. Moreover, these startups don't come with reviews or ratings like many products that we're used to buy on a regular day-to-day online. One of the models that has emerged and has been fairly successful is the model of syndication. With syndication, a lead investor, essentially someone with experience, does the due diligence on a particular deal and then brings it online for the crowd to co-invest. In exchange for this favor, the lead investor usually receives a percentage of the upside, called the carry. This model has been growing at a fast pace. More than 1,000 deals have been closed on some of the leading platforms just in the last year. And what's interesting is that it seems that the model is actually matching good startups with good investors. The challenge so far seems to be, how do you really expand these deals beyond Silicon Valley or even to different verticals? Many of the leads, essentially these investors that are allowing others to co-invest with them, come from consumer-facing industries, and so the crowd is able to assess their reputation easily. But it's unclear how this would scale to different sectors like biotech. Moreover, as capital flows down in VC, of course, only the best deals that are closed on equity crowdfunding platforms will be able to gather more funding. This would be a very good test of the new equity crowdfunding market.